Hey y'all, what's going on? Welcome to another edition of Study Crypto. And today, this video is going to be about why is ICP my ticket to the promised land in terms of the next bull market? Why is it a good buy? Why do I think it's a good buy? If you haven't already, please hit the subscribe button and the like button if you enjoy content like this. But right now, we're going to get into the chart of ICP. I'm on TradingView and we're going to do some chart analysis. Right now, I am on the daily chart, but what I'm going to do is I'm going to pull out to a weekly chart just so it's a little easier to read it over a longer time span. Now, why did I do that? Well, let's see. Well, a lot of people will talk about the fundamentals of ICP and how it's a great protocol and it's a great team and all that. And you know what? Honestly, all that may be true. But here's what I see that's more important that's true is the price action. Now, considering when this project launched, if you see where my cursor is right now, it is May 2021. Okay, the price it launched. It was a solid project, and what happened? It just plummeted. It launched at the wrong time. This is around the time that we were starting to get into the bear market when everything was falling in price. And so, as you can see, it launched around that time and it just fell like a rock. And it has been trending down ever since. As you can see, it flattened out right around $4.33. However, what's beautiful is that it fell that far. Look where it fell from. It fell from $623 approximately. Okay. So if you consider the potential action that will happen in the next bull market, in the next run up, if this thing gets anywhere near even halfway, what you see here I have drawn out is the Fibonacci lines. The 50 fib is a usual sign of retracement, especially during a bull market. You can expect a lot of tokens to at least get to the 50 fib. If this thing at least gets to the 50 fib from where it is now in terms of price action, so we're at $4.70 ballpark now. If we at least get up to the 50 fib in the next bull run, as you can see there, that's a 6,675% gain. That's right, 6,675% gain. How much is that? My math can't count that high. Okay, 6,675% gain. And that is only, ladies and gentlemen, that is only if we get back to the 50 fib. We're not talking all-time highs. We're not talking it goes to the moon. We're just talking back to the 50 fib. You get a 6,000% gain. Just to put that into perspective, a 1,000% gain is going to take a token from $100. Well, a purchase of $100, it'll turn that $100 purchase into $1,000. So a 6,000% gain will take that $100 purchase and turn that $100 purchase into $6,000 with a $100 purchase. Just to give you how impactful a 6,000% gain is. So that's just to the 50 fib. We're going to go over a couple more things here. Now, what if we went back up to previous all-time highs? Well, where it launched from? Well, that's going to be a 13,000% gain. That's absolutely ridiculous. Okay. Obviously, if 6,000 is ridiculous, that's even more ridiculous. Now I'm going to go into wishful thinking. Let's say we hit the fib lines. Okay. If we hit our Fibonacci take profit levels, again, this is Fibonacci retracements. This is math. These are targets that projects, tokens, crypto, stocks, whatever you name it, these are targets that are people would look at as being potential take profit points where the price would turn around. These I'm not the top three are the big take profits. You have the 127 and 141 fib. I do not think. this is going to get up to these levels, not in the next bull run, maybe 2 or 3 bull runs from now. But these are possible levels that an investor would look at taking profits at. But let's just to give you an idea what those even look like. If you go at least to that first real take profit level, that's a 19,000% return. If you want to get really silly with it, 25,000% return. Now, again, we have been known for coins and tokens in crypto world to hit these take profit levels. They're not outside the realm of possibility. I give them a 1 or 2% chance. Okay, it's not zero, it's 1 or 2. What I do give a higher percent chance of hitting is the 50 fib in the next bull run. Sure, get your nice little 600% gain and keep it moving. Now, with that said, why do I think now is a good time to actually get into this project? Well, again, when we look at the chart, right now, again, we're on this weekly chart. And what I have here, these auburn-ish looking trend lines, this is basically showing the trend line where price fell and it created a trend that price could not get back over. And what you can see here is the various trend lines. Right here's one, and you see price came up and shot back down and couldn't get back over again and failed. So this becomes a trend line. Once this first position is hit, price falls down, this becomes a trend line, and we can see if price can fight to get over it. And as you see, so price fell to rock bottom, hit and came back up on September of 2021, hit the trend line and failed. Came back down, tried again in November of 2021, hit the trend line, failed. Came back down in January of 2022, and it broke through. And so now it went on a new run. Now you might be saying, well, when should I have bought? Was this a good time to buy? Why are you saying buy here versus somewhere else? What if it falls more? It's a good point, but I'm gonna show you why now is the optimal time. But let's go over these trend lines. So now that we have this point up here, so let's see our new trend line. Well, the new trend line will be from here to here. As you see, price hit, came down, broke, tried to come up above, fell again, fell again, fell again. And eventually, with this trend line, price broke through and then it fell. Okay, so price did break through this trend line. So you're like, hey, maybe this was the good time to buy. If I would have bought here when it you might be saying, hey, well, based on your logic, if I bought when it broke through this trend line, I'd have lost money and it would have fell down. I would have went from $30 down to $16 or all the way down to $5. So that wasn't a good place. Why are these trend lines important? I'll show you in a minute. It's about all the analysis. I'm gonna show you some other interesting data in a minute. Now, where's the other trend line? The other trend line is the most recent trend line. Well, there's actually two. So there's this trend line, as you see, price came down and kept on banging its head on this trend line. See, once it made this particular peak, price could not get over that peak. It kept on coming up, failing, coming up, failing, coming up, failing, coming up, failing, and eventually it came up and failed originally on July of 2022, and it kept on failing month after month, week after week, all the way until November of 2022. And then it finally broke. And then you might be like, oh my gosh, we're home free. This is it. Well, it came up, and what do you know? It failed again. Price failed. Came down, and what happened? It failed here. So now we have a trend. These 2 points make a trend. Point A, point B. That creates a line, that creates a trend. Now, what happens? Price falls, price falls, price falls, price falls. Then, boom, it pops up. And it pops up over the trend line. And now we are above that trend line. But you may be saying, wait, we've been above the trend line before and it just failed. Why wouldn't it just fail now? I'm going to give you the other piece of data. But next, we have to jump into the daily, which I'm going to jump into the daily chart, because that's where we're going to be able to take advantage of the moving averages. The daily moving averages is what is widely used as a way to determine the support that a particular price has or resistance that a particular price has. I'm not going to get into in-depth analysis on on the moving averages. But what we have here is the red moving average, which is the 200-day moving average. This is the strongest moving average, meaning price. This usually creates the support or the resistance for price over long periods of time. Price rarely ever breaks through this particular point. As we see here, whenever the red line, 200-day moving average, whenever price was below the candlesticks, whenever it was below the 200-day moving average, price stayed below that 200-day moving average. It stayed below. This is the daily chart, same chart, just on a daily time frame. As you can see, the red line is that 200-day. Look, price, when price was underneath the 200-day moving average, it stayed. It stayed for a very long time. It popped up here, had a little retest, and played around with it. Again, it's not perfect. It's the 200-day moving average isn't a perfect piece of the puzzle when determining what's going to happen with price, but it's one of our many tools, and it just adds a piece of the puzzle. But as you see here, price came up and failed again and went back under the moving average. Why? Well, this area becomes interesting because we have price popping up above the 200-day moving average, coming up here, failing, coming back below the 200-day moving average. This whole area, it becomes iffy because then price pops up again and it fails. So what do we have here? We have a point of resistance. This trend line becomes a point of resistance that price needs to break through in order to show a true bullish movement. Okay, but it fails to do that. In fact, the price keeps failing underneath this trend line, And what does it do at this point? Back in May 2023, it goes back underneath the trend line, okay, underneath the 200-day moving average. So we had a brief moment back in January 2023 when it popped up above, and people may have been like, hey, this is a good time to buy, okay? And ideally, what you want to see is that price pops up above, comes down, retests, and goes. Again, this was a good fake out move. It was a good fake out move. But what is different about this time? Well, what's different about this time? Well, let's just go back into the analysis of the 200-day moving average. As you see, price stay below, and then what do we have here? We have a couple of things. We have breaking above the trend line, this line. Point A and point B, that makes a trend line. You draw the line, and we see, and price has broken above the trend line. That's bullish. What else do we see? Well, and that happened on October 24th. What's next that you see? Well, price gets above on November 7th. Price gets above the 200-day moving average. That's also a bullish sign. Again, when put in conjunction with everything else, that's very bullish. Okay. Next, what else do we see that's bullish? We have this cross right here. This is a bullish cross. Whenever the you have your moving averages crossing up like this becomes a bullish signal, which creates support. So what we're doing here is we're creating support at this particular level. Okay, it's bullish. Also, on the day that I'm recording this last candle on November 18th, that's a very bullish candle. It's a shooting star or morning star, whatever it is. Why is it bullish? Well, because price tried to test, price came down, tested the 200-day moving average, and as you can see by the wick, price shot right back up, meaning buyers overtook the sellers and pushed price right back up hard. That's with force, that's with power. That's buyers and the market saying, no, we're not going below this price. We're not going below the 200-day moving average price of $3.96. No, we're staying above that. So it's pushing it up, pushing price up. So this is creating support. That's a strong sign of support. And finally, the last piece why I would say it's a good time to take a chance on this is because we're likely at all-time lows. All-time lows were right around here. $2.80 something cents, which was my initial buy level during the cycle, around this area right here. Okay, we're around all-time lows. We're seeing in general that the market has bottomed out. The bottom is quote unquote in, and we're breaking trends on a macro level in the crypto market. Okay, on a macro level, things are breaking downward trends. Things are breaking to the upside, going up. Okay, I'm not saying anything's going to moon, but what this does, it sets up the fact that we're no longer going down anymore. We're either going up or sideways. It's likely that this is the bottom, and this would hold strong into the next bull market, which is going to be after the halving in next year, late 2024, early 2025. So I say all that to say this is good. There's a high probability that this is the best entry point in this area that you're going to get in this token as well. At this particular point in time, most tokens, you're looking at the best entry point you're going to get. And what's going to happen? Well, the best case scenario, again, if we get back up to those 50 fib levels, okay, if we get back up to, again, the 50 fib is so far up on this chart, it doesn't even show. We get back up to $300. If we just get back up to there, you're talking about a sweet almost 10x on your money. Okay. And I think that's totally possible. Conservatively speaking, that's totally possible. Either the 38 fib or the 50 fib, that's totally possible in the next bull market when all the money starts running into crypto, when all the big players are buying Bitcoin, and then money leaves Bitcoin to play with alts and wants to get into some crazy alt projects. This would likely be a nice alt project for them to get into. Okay, so in any event, that's my take on ICP. I definitely expect it to be a big winner that might even go unnoticed because, again, if you look at the potential that price has already shown it can get up to, that this thing had, it's very high. Very few tokens have this level of potential. Very few. And, the good news is that you could buy this easily on Coinbase. All right, guys, that's it for this video. Tell me what you think. Do you think ICP is going to be a big mover? Is it a waste of time? What are you looking into right now as your quote-unquote Mega Millions lottery ticket for the next bull run? All right, guys, thanks so much. Talk to you soon.